Yo, we're back. Oh my goodness, TRMC is here, ready to rock and roll. This September is Life Insurance Awareness Month. And so we've got a very special presentation for you this evening. Put on your thinking caps because we're going to talk about legacy wealth. We're going to break down the different insurance and how you can really use insurance as a way to protect you. You know, one of the things that I'm very clear about is that if you knew better, you do better. And so go ahead and type in the chat box where you're watching from, because, you know, I like to find out where are people watching from. Who's up in here? Who's up in here? I like to have like a little competition, you know, see who's watching from the furthest. So type in the chat box where you're watching from, what state, because that really gets exciting. So with that being shared, I want to say I'm very grateful to have you here. My name is Marlon Smith. And on behalf of the Real Money Coach, we have been doing this since April 2nd. 2020, have not missed a Thursday since April 2nd. And why is that important? It's important because, you know, COVID-19 hit and then there was fear. There was, you know, really anxiety, right? I mean, people were stressing out, you know, the stock market, stay at home order. People are like, yo, what's going on, right? Jobs are being lost. I mean, the whole nine. And so Tony and I and Chris, we said, hey, let's do something. You know, we can't meet, you know, we can't have our regular live seminars and whatnot, but there's so much fear, we need to do something. So we co-wrote a ebook called Recession Proof Retirement. And if you haven't gotten it, please send an email to info@therealmoneycoach.com to get your copy. It is fantastic. And then also, we then said April 2nd, hey, let's launch a virtual town hall. The Real Money Coach virtual town hall. And man, it was phenomenal. The feedback was incredible. People were like, whoa, this is awesome. And so we thought we'd do maybe one or two more. And here we are. It is September and we have not missed a Thursday. And so I see we got Dr. Benita Harris here in Charlotte, North Carolina. Who else is here? Type in the chat box. I see you chiming in. I see you viewing. I like to know, where are you watching from? All right, Ruth is here. Okay, thank you. Oh my goodness, Charlotte is representing. I think Charlotte may win tonight as far as number of people representing a state. So type in the chat box where you're watching from, because again, this is your show. You know, one of the things that we really admire about our viewers is that people are very engaged, they're very active, because again, type in the chat box. I want you to type in the chat box. Have you ever said, if I had only known back then what I know now, how my life would be different? Have you ever said that? Type in the chat box, yes or no, because I think that's something that we could all relate to. I know I can. Man, if I had only known back then what I know now. And, you know, this whole thing about insurance, you know, a lot of times people think, oh, you know, man, it's wishing death on somebody. But, you know, really, here's what I want you to understand. You know, ain't none of us getting out of this life alive, right? And so when you put it in perspective, it's really about you understanding that it's really having perspective and understanding that, you know what, okay, how can I be smart? What can I do to create legacy wealth? It's a mindset. It's a difference in the mindset. And so with that, you know, I want you to understand that it's very important for each one of us to have that winner's mindset. You know, I just watched, is it Chadwick Boseman, I believe, you know, Black Panther. And I really got inspired when I've been watching some of the, you know, special tributes to him. I mean, here's a man, 4 years, you know, had colon cancer, and you know, would have never known, right? I mean, he just, you know, pressed forward. Then I watched a commencement speech that he gave at Howard University. Man, this dude was really, I mean, he was enlightened, and it inspired me. I have no problems, right? I mean, you know, when you really think about it, when you're on purpose, and that's what he really talked about, being on purpose, you know, life takes on new meaning. And I think when you have a purpose that's drawing you to the greatness that's within you, you will weather the storms. You know, I'm glad our brother Lloyd Glenn is here, and you know, it's really great. James is here, okay? And so, yeah, James, you saw it as well. That commencement speech was no joke. And I'm sharing this because, you know, one of the things, even as I'm talking, I was very tired. I only got a few hours of sleep last night, but just even talking about it. See, what you allow into you, what you allow as far as the information, the wisdom, it allows you to like be inspired or be depressed. And I want you to be very careful as far as what you're letting into your ear gate as well as your eye gate, because at the end of the day, time is precious. And so you're at the right place at the right time, because tonight we're going to be talking about insurance. And, we've got our colleague, Tony Jackson, the maestro with the magic. He's going to be coming on in a few minutes. And so I'm really excited, because here's what I want you to understand. What you do today will dictate where you'll be tomorrow. I want all those people to say yes, yes, yes. I've said, if I only known back then what I know now. Let's take it to the next level. What do you wish you had known back then that you know now? Type in the chat box. I know for me personally, I wish I had known the power of IUL, okay? Index Universal Life. I don't know if Tony's going to go deep into that tonight, but that's something I wish I had known. Because, three things. One, tax-free income. Number two, right? Living benefits, right? Tax-free income, living benefits, right? And then, having a death benefit. I wish I had known this back in the day. I lost tens of thousands of dollars in the stock market, right? 2000, 2008. But man, if I had my investment in an IUL where zero is the new hero, man. So we're going to go ahead and bring Tony up, because you can see I'm very passionate and I can really rock and roll. So Tony, let's go ahead and bring you up, man. How are you doing this evening?
Marlon, I am doing absolutely phenomenal, man. It's been a great day, a great week. We're going to talk about such an important topic tonight.
Yes.
And I know you shared it before. I want you to share your story. I want to share some of my stories. But as we unpack this month, like you mentioned, September is Life Insurance Awareness Month. And We're going to have a special guest come on as we go down the road here. We're going to have some special guests that will come on and talk about how having it, or maybe even some not having it, had an impact in their life. Mm-hmm. And then, as we know, life insurance is not all about death, right? No. It's a lot more than that. And so we're going to unpack some of those things as we go through the month. But I'm excited about sharing this information. It is something that I'm passionate about. I know it's something that you're passionate about. I know a lot of our people that are watching, it's things that they're passionate about. And so we're really excited. It's so good to have James and Lloyd and Ruth and Dr. Juanita all with us. And so, we're just ready to just share this information. And it's not an easy topic to talk about, really, because some people, they don't want to talk about life insurance. And if you've had some bad experiences, it's hard. But I do want to say this. I do want to say that when we look at all the things that have happened, if we've never known it before, how important it is. Right. And I go back to January, I believe it was in January that Kobe Bryant lost his life unexpectedly in a helicopter crash.
Sure.
And then now we have all these other things that have happened. We got COVID that's happened. We got John Lewis, a legend in the civil rights movement, went home to be with the Lord. We've had a very, very dear friend we lost this week that really just, hit us in the gut.
Yeah.
And I've known other people that have experienced some sickness and things like that. And so it's a very important topic. But if you tell people, hey, listen, I want to sit down and have a conversation with you about life insurance, that's when they start running the other way. But we're going to deal with it because it is important.
Yeah, I agree, man. And I think that, for me, even this year, in addition, 180,000 people, I think have died with COVID-19 here in the United States. And, I personally, 3 classmates, one high school buddy, 2 college classmates died within 12 days of each other. One a heart attack while he was sleeping, one pancreas cancer, and the other COVID-19 related. And so, I'm sure. And then, a month after that, another college classmate drowned. He drowned. So what I'm saying is that, this is real. And we've got to be able to now talk about it. I don't know why we're, life insurance is a bad word. listen, other cultures, other communities, wealthy families, they understand how to use this as a vehicle for creating legacy wealth. And we got to wake up. We got to wake up and, let's get serious now, because, having our financial house in order is the name of the game, straight up. And, you and I, Tony, were just with, Dr. Dennis Kimbrough and these chamber presidents last Saturday for a very special meeting. And I believe, Dr. Dennis Kimbrough, who's the author of Think and Grow Rich, A Black Choice, he said 37% of small businesses, African-American small businesses, will not be able to recover from COVID-19. I mean, hear what I'm saying. This is real.
Yeah, and you're talking about over a third
of
African-American businesses won't survive it.
Right. And so I love what Ruth Bell said, when I asked the question, what do you wish you knew back then that you know now? And she said, knowing my worth.
Oh, isn't that good?
And that says it all. That says it all. I mean, there is greatness for all of you that are watching right now. You could be watching, I don't know what the sitcoms are, right? You could be watching, the news, political thing, or you could be watching The Real Money Coach, where we talk about real experiential, action-oriented information. And so for me, that's what this is about. So Tony, come on, man, let's get into it, brother.
Well, man, really what I wanted to do, let's do this, man. Let's start off with, you often talk about your brothers. Just kind of unpack that for us a little bit. And then I'm going to tell a little bit about my own situation as well.
Yeah. I mean, the thing is that, 2009, I got a call February 2009, and basically it was, very, very sad call. And the person on the other end said that my brother Sean, 2 years younger than me, had died. And I was just in shock. So that was February 2009. Then 7 months later, September 2009, I get a call from my cousin. She's just hysterical. And she said my brother Greg had died. Greg is 8 years younger than me. And so, it just really rocked my world. I remember going to the funeral home for both of them and looking, at their bodies, right, in the casket. And, it was deja vu, right? My brother Sean has one daughter. And I remember making a commitment that whatever I do for my kids, I'm going to do for Jordana, his daughter. I can't replace, her dad, my brother, but at least I could, help create a financial opportunity, for her to be able to still thrive. And then, 7 months later, I'm in the same funeral home. My brother Greg was bigger, taller, longer, casket. And, he has 4 kids. And so I made the same commitment. And so when I learned about this whole, IUL and $1 Million Baby program and how wealthy families create legacy wealth by getting insurance policies, I was like, I'm all in. I'm all in. And now I'm on a mission, to help more families understand and have these type of conversations like, let's be smart. And then, Thanksgiving 2009, just a couple months later, my mentor, someone, a true brother, mentor that took me under his wings when I worked for Hewlett Packard, fraternity brother and the whole nine, man, it just still startles me, that he passed away Thanksgiving week. They found his body at his home Thanksgiving week. So what I'm saying is I'm not here to be gloom and gloom, but what I'm here to say is straight talk, real talk, no chaser, that we all are going to make our transition. And so it's not about, if it will happen, it's just a matter of when. And so to have our financial house in order is so important. And so, yeah, they say your misery can become your ministry, right? And your test can become your testimony. So that's my testimony. I've got, family members who, fortunately have been in position where, they've got coverage and things have happened. So, the beautiful thing is, this is really a very, very straight talk presentation, and again, our intention is please, if you've already got some financial advisors, then, reach out to them. If you don't, definitely send an email to info@therealmoneycoach.com. Because again, we can work together and share information and go deeper. In fact, I would encourage you, if you like to get any more additional information. It's complimentary. There's no obligation. It's it's confidential. But go ahead and send an email, because again, this is so important. This is really a very important topic. And again, with Insurance Awareness Month, Life Insurance Awareness Month being September, we're going to have different guests on for the whole month of September talking about this topic, taking away the negative stigma around it. Because again, what I'm finding is that there are a lot of communities, a lot of wealthy families that utilize life insurance as a way to create generational wealth. And so we'll talk about that. So that's my story, Tony, and very excited.
Hey, listen, I want to get a little interaction from the group. I'm going to ask this question. What is better, term or whole life? Term or whole life? We want to see what people will have to say. And I'm going to unpack this. We're going to call this Life Insurance 101 tonight, but I'm going to unpack that a little bit. But I want to ask the question, what do you think is better, term or whole life? And people have very strong feelings about it. So I'm just interested to see those of you who are viewing, tell us which one you feel is better. Which one you feel is better. And while you guys are doing that, I want to share a little bit about my story. When my mom passed, my mom had actually 6 life insurance policies. And, the thing about it is when we got to the funeral home, we're sitting down, we're going over all the costs and all those types of things. Thank you, Ruth. Ruth says whole life. And so we're going over the costs and all those things, and we find out none of those 6 policies would pay. And so I look at my dad, and, I look at my uncle, we kind of make eye contact, and, we kind of tell my dad, hey, listen, we'll take care of it. I was just out of college and all this. And my dad looked up with tears in his eyes, and he says, no, you won't. He said, I will not let you pay for your own mother's funeral. And my dad was old school, World War II vet, Mississippi born, had a lot of pride. And he said, that's my wife, and you won't do it. And I don't care if it is your mother, you won't do it. And my dad actually borrowed money on his house in order to pay for my mother's funeral. And I remember that, and that stood out to me. And then, my dad, a few years later, he gets remarried, and here we are some 16 years later at the funeral home, and find out that my dad's coverage that he had through a factory that he worked at for 38 years. And his coverage was less than $2,000. And so I love what Glenn said. He said, whole life for sure, but the best policy is any policy that actually is enforced when you need it. And I actually sent out a message on Facebook. I posted it, that very thing today, is that the best policy to have is the one that's enforced at the time when you need it. So what I want to do is I want to break this down, and I want to show you a little bit of the different types of life insurance and kind of how they work. And again, we're just looking to make this educational tonight. And so I think Chris is going to be able to take me off here, and then I'm going to reappear in front of my whiteboard, and we can go and we can dig into this a little bit. All right. So I asked the question, what is better, term or whole life? And so I'm going to break this down. Term life insurance. So when we think about term, this is how term works. So term works is you have a certain dollar amount. And I think I got a little echo. So, all right. So you got term insurance, and let's say you have a $100,000 policy. That policy goes out for a certain length of time, and then the coverage ends. And so when that coverage ends, it might be 10 years, 20 years, it might be to a certain age. But at some point, that coverage is going to end. And so then when the coverage ends, there's nothing left. There's no equity. That policy's really just done. at that point. Now, what happens is, generally speaking, the premium that you're paying starts low, and then it'll move up like a stair step. And so what happens is that it starts low, and it's going to stay at that rate normally for a certain time period, a certain term. And that term may be 5 years, it may be 10 years, it may be 20 years, but it's going to stay that price for a certain amount of time. The longer it stays there, the higher it goes. But then what happens in increments, it starts to go up. And so normally somewhere between 5, 10, 20 years, that policy goes up. And eventually it becomes very expensive. Now, the part about it with term is this, that 98% of them never pay. And the reason why they never pay is because people either outlive them or they become just too expensive to keep. Because if you outlive whatever age it cuts off, whether that's 5, 10, 20 years, or maybe it's age 70 or maybe 80, something like that, when the policy ends, there's no more coverage there. So it's very common for a person to outlive their term policy. And so that's why term is really for that. It's for a specified period of time. There's some great uses for term. Mortgage protection. There's some other things that where term makes a whole lot of sense. So that's generally speaking when we talk about term insurance. Now what I want to do is move to a broader category, and we're going to kind of break this down a little bit. The broad category is what we normally refer to as whole life. Now, I prefer to call it permanent insurance because there are different types of whole life insurance. So if we call it permanent insurance, that's probably a better name for it. Here we go. So this is how term works, or whole life. So you have a whole life policy, and let's just say we're using that same 100,000. That same 100,000 is going to stay in force, and it's going to go normally to age 121. So that policy is going to stay in force until you're 121 years old. Now, the good thing about it is when you turn 121, you're going to get whatever death benefit that you bought. So if you bought a $100,000 policy, generally speaking, with a whole life, you turn 121. From your 121st birthday, they're going to send you a check for $100,000. And you can go and have the birthday party of your lifetime at 121. So I don't know who's going to come, but if they know you got 100 grand, I'm sure there'll be a few people to show up. So what happens if you die before then is that money is going to go to your beneficiaries. Now, your beneficiary, it's very important that you know who your beneficiary is. I've seen policies over and over again where a person thought their beneficiary was one person, but it was actually someone else. Because maybe daughter has a name change, or maybe it's a spouse, the spouse passed, we didn't think about changing the beneficiary, and quite frankly, it could be an error by the insurance company. And so you want to make sure, and that's part of what we do when we do a life insurance checkup. A life insurance checkup is that we make sure that your beneficiary is who you think it should be and who you want it to be. And so there's a time when I actually paid out $100,000 to a person's ex-husband. And it's because that she had a policy, she got divorced, she got remarried, had kids with her new husband, but never changed the beneficiary. So when she passed, we had to pay that money out to her ex-husband. And so when we talk about doing a life insurance review, we want to make sure that the beneficiary is who we want it to be. And let's be honest too. You may have named someone to be your beneficiary and you guys had a little falling out. And you don't want them to get the money anymore. So you want to make sure that you keep your beneficiary up to date. So that's just a little side note. one of the things that we do for free when we do a life insurance checkup. Now, the other piece is the premium. The premium that you paid on the policy is actually going to be higher than term, but what's going to happen is that it's never going to go up. So it's designed to never go up. So it's never going to increase. And that's very important. So what happens is that the premiums actually stay the same. And in some cases, we can even have it be a paid up policy in which you can stop paying at a certain point. So those are some of the important features there. Now, what happens with a permanent life insurance is that we also have this thing called equity that's growing in it. In life insurance, we call that cash value. So you have cash value that is growing in that policy. That cash value can be borrowed out, it could be taken out of the policy, it could be used to pay the policy up. There's many different uses that you can do with that depending on the type of life insurance you have and what the cash value is designed to do. We have policies today that are designed where that money is designed to use a concept we call be your own banker. Well, now you're using your life insurance contract as almost like a bank. So you can take money out of it, buy a car, pay yourself back. It's a very good use in retirement. So you have this cash value. But one thing you have to do is be careful and know if your policy was designed for you to use this cash value. Because in a whole life policy, normally if you take money out in forms of a loan, the interest rate normally is somewhere between 6 to 8% on whole life policies. So you're paying 6 to 8% to use that money. And if you're not careful, you can actually get a policy that becomes what I refer to as upside down. So now you get to the funeral home and, you know, grandma had a $20,000 policy, but she borrowed $10,000 off of it for her favorite grandchild to buy a car or whatever, and they didn't pay the money back, and the interest continues to accumulate, and so now that policy is only worth $5,000. And so that's one of the things to be careful of when we're talking about a whole life policy. Hey, and Marlon, I would say too, if you're watching the chat box, if there's questions or anything that someone has, if we could make sure that we hit those. Otherwise, I'm just going to continue on with just a little bit more here, and then we'll come back onto the stage. All right, so that's whole life. Put any questions that you have in the chat box. This is how I explain it. Now, there are more than one type of whole life or permanent insurance. You have traditional whole life, and then you also have universal life. And I equate it to this. Some people do not like universal life. Other people love it. It's really a preference, but it makes a lot of sense for a lot of people. Now, with a universal life, your $100,000, your beneficiary, all that stays the same. It's designed to go to age 121. So none of that changes. So it's still designed to go to age 121. However, what happens with the premium is that the premium it's also flexible. So a lot of times what can happen is you're going along, depending on life circumstances, you can actually increase your premium. You can keep it the same. You can lower your premium. You can do a lot of different things with your premium. So it requires a bit of discipline because it is a flexible premium. And now, what happens with the death benefit oftentimes too is that the death benefit can remain level, or you can have an increasing death benefit. So you can start off with 100,000, and the 100,000 is going along, and then when the cash value goes up, the death benefit goes up, and it still goes to 121. So it has a great deal of flexibility inside of a universal life policy. And then there's the cash value, which we call account value in a universal life policy. Now, there's different methods of what happens to this account value. There's a fixed, you can have a fixed account, and a fixed account really is just based on interest rates. And then there is a variable, and variable is based on the stock market. So your value can go up and down according to the stock market. And then we have what we prefer, which is an index. And how that works is that it's based on an index like the S&P 500, which is your largest publicly traded companies. The difference with the index is that, of course, when the market goes up, you make money, but when the market goes down, you don't lose any. And so this is just kind of some basics. And a lot of times people don't know what kind of policy they have. It's not being reviewed, so it's a good idea every few years to at least make sure that your policy's been being renewed and being reviewed. Now, the other thing I want to caution people about is that if you have turned on the TV lately, or you've seen commercials, well, they'll say everyone's accepted, no one's turned down. So those are guaranteed issue policies. Now, what happens with those is that they have a waiting period. And the waiting period on those types of policies, depending on the state that you're in, is normally 2 years, in some states 3. So what happens is you have to have that coverage, be paying for it before it actually pays a death benefit. And so now there's some people that needs to be the policy that you get because of your particular situation, maybe health-wise or something. But when you see those commercials on TV that says everyone be accepted, no one will be turned down, those types of things, when you see that you know that most of the time that's going to mean that there's a waiting period on that policy. And so those are very, just a couple of things I wanted to point out about life insurance. And at this point, I'll return back to the StreamYard, and we can entertain some questions.
All right.
Marlon, so what you think? A little information for our viewers.
Great information. You know, I think information is potential power, right? It becomes power when you take action. So, you know, any questions? Anybody have any thoughts as far as what Tony shared? What did you enjoy? What were any ahas or anything that you think, you know, as far as, you know, I know Tony asked the question, is term or whole life, right? And so now that he shared a little bit more, are there any other questions, I guess, you know?
Yeah, this is a great time. If you have any questions, try to type them in the chat box. We could answer them. Normally, you know, we always get some questions when we did these live. I know it's a little different with virtually, but go ahead and type your questions and we can go ahead and answer any questions that you might have as it relates to what we've talked about so far.
Mm-hmm. I guess while, you know, people are typing their questions, Tony, I think the thing is that why do you think there is a stigma around insurance?
Well, you know, I think the stigma is, and I've heard all kinds of things in my 23 years of doing this. You know, I've heard all kinds of things like, you know, I don't want to buy life insurance because I don't want to jinx myself, you know, or, you know, I've heard people say, well, I'm not interested in leaving anything behind.
Hmm.
And so that's a mentality and a mindset that's out there. And I think we have to change that mindset because it's not just about the whole, am I, what type of insurance? Here's what I say. This is the priorities when it comes to insurance. Number one is making sure I have the proper amount of coverage. That's number one. And we can even go and unpack that a little bit. I can go back to the whiteboard. We could do that. But number one is, do I have enough insurance?
Hmm.
Number two is, does it fit my budget? And then the third is, what type of insurance should I have? So number one, making sure I have enough coverage. Number two, making sure it fits in my budget. And then number three is then the type of insurance.
So now you have an acronym for determining the amount of insurance. Is that correct?
That is correct. So you're going to take me back to the board. I'll go back to the board. Let's unpack this acronym a little bit.
Yeah, I think so. I think that would be good because, again, everyone says, I have some insurance while others say I don't have any insurance. And so, yeah, let's talk about that. What is the amount of insurance that you need?
All right. So the acronym that I use is actually LIFE. LIFE. F-E. So LIFE stands for loans. So here we're talking loans, otherwise, debt. So we're talking about, the mortgage, the car payments, the student loans. We're talking about any debt or loan that you have. Some people prefer to use the word liabilities. So any loans, debts, liabilities that you have. So that is the first amount. And let's just say, for instance, a person has between their mortgage, car loan, and all that kind of stuff. Let's just say it's $250,000. Okay. And then the I is for income. And we're talking income replacement. And that's one of the main reasons why we have life insurance is because of income replacement. Most people buy life insurance because they love somebody. And so income replacement, so if you take your income, let's just say you're making $50,000 a year, how many years of that income do you want to provide for your family? Normally it should be somewhere between 5 and 10 times your annual income. Certainly if you have smaller kids, it could even be longer, but you want at least to have 5 to 10. So if we go even with the low end of that, and let's just say we go with 5 times your annual income, person makes 50 grand, that's another 250,000 of coverage that you need. And that's just for 5 years. The F is for final expenses. So final expenses, what most of us think of is we think of funeral costs and all those type of things, but there also could be some more costs like, selling a estate. It could be other things that have to be done in terms of final expenses beyond just the funeral costs. But a normal funeral today is somewhere between $10,000 and $15,000. So if we could be really safe by saying, let's go with 20,000. Okay. So now we have the E is for emergencies, education, those type of things. So it could be if you want to set up an educational fund for your kids, if you're have small kids, or if you want to set up some type of education fund for grandkids or what have you, but for emergencies, education fund, that type of thing. And for the purpose of this, and also to make my math real smooth, we're going to say, let's go with 30,000. So now, as we look at that, you have 250,000 plus another 250,000. That's 500,000, and then 20,000, and then 30,000. So now we have a total need. Now we have other calculators that we can do this, but I'm kind of doing it old school. We got a total need of $550,000. Now, what we want to subtract out is coverage that we have already. So normally, if you're making 50,000, you may have 1 to 2 times your income at work. So let's just assume it's 2 times, so we can subtract out 100,000 here. Now that leaves a life insurance need of $450,000. So that's just an easy way to just kind of get a ballpark figure in terms of how much life insurance I need. And then it's a matter of how do we find a way to make sure we meet that need. And of course, that need changes as time goes and those types of things. But that's just a quick formula: life, loans, debt, student loans, liabilities, income replacement, final expenses, and then education emergencies. And so when we add all those things up, how much life insurance need do we have? And the whole purpose here is to make sure your family's protected, so that if you as a wage earner, notice I said wage earner, not primary wage earner, because it's not just the primary wage earner, but it's anyone who's a wage earner. Certainly even if you are I don't want to say housewife, because it could be a husband, right? It could be a house husband. But that also has value, because if you're not around, someone's got to pay for babysitting and all those type of things. And those are some of the things that we can build into the E for, education, emergencies, that type of thing. But there are a lot of things to consider. And most people think, oh, I just need a $25,000 policy to bury me. Well, there's a lot more to it than that. So back on you, Marlon.
I'm sorry, I was talking and I was muted. Too funny. So what I was saying is, if you have any questions, we've got 2 questions already we're going to go through. But if there's any other questions you want to post in the chat box, please post those now. And I like it. Thanks, Mike. I still use
Michael Sloan from Michigan. Yeah. We got Michigan in the house tonight.
Good.
Good to see you, Mike.
So, you see, Lloyd has asked, when is the best time to start converting your term insurance to whole life, if that is an option offered on your current policy?
Well, the thing about it is, when you start doing conversion, and of course we do a lot of those where it makes sense for a person to maybe start off with term because of the cost, maybe they're a new family, maybe they got a new mortgage, and then slowly start converting it over. And I think as soon as you can really start to afford the premiums on the permanent life insurance is the best time to start converting it, because you take advantage of your youth. The younger you are, the least expensive it's going to be, and all those types of things. So that's all part of it as well. So that's what I think is the best. And I see another conversion is that, can you convert a term to a whole life? And that really just depends on the term policy. The term policy, if it has conversion rights to it, then it's possible that you can make a conversion. Now, one of the things that we haven't really addressed, and we probably will next week to some degree, is we haven't addressed what we call as living benefits. Now, today, most policies have living benefits. And when I talk about living benefits, I'm talking about things like coverage for critical illness. Critical illness could be heart attack, stroke, cancer, kidney failure. All those types of things are possible that in most of the carriers we use include that. Chronic illness is when you need help doing 2 of the 6 daily activities of living. eating, dressing, bathing, toileting, and etc., or you have a cognitive impairment. So all those are coverages that are built into life insurance policies now that weren't there years ago when I first started in the business. But now we have a lot of those type of benefits on there, and it's almost like, it's almost like you have the old cell phone, or do you have the new phone? I mean, you remember the old bag phone you had to pick and you carried this bag around, versus now you got an iPhone, it's got all this power right there at your hand. So it's really, do you have the new or the old? And so we certainly believe that it makes sense to have the new where it makes sense, because replacing your coverage is not always the best option. Sometimes the option is getting additional. Sometimes the option is to do some conversion. And what someone asked here is, do you lose money if you terminate or convert a term policy? Well, you're not losing any money any more than you would have lost anyway. So, and what I mean by that is, with a term policy, the coverage that you have in there is you're just kind of renting that coverage. And so if you walk away from that policy, there's no value, there's no equity in the policy at all. And so if you convert it, you're not losing anything more than what you are already, kind of out of, because those premiums are kind of, gone down the drain, so to speak. And so it doesn't hurt you to convert. It actually is a good idea to convert, even though in some cases you may get a small credit for some of the premiums you paid in your term policy, but generally speaking, there's not going to be any value that moves over. But if you continue to keep the policy, if you don't die, at some point you're losing premiums anyway too. But great question. Great question. So I would love to do an informal survey. And we asked the question earlier, which is better, term or whole life? Now I want to ask the question to the folks, do you feel like you're adequately covered? Michael talked about the life method. I talk about the life method. Based on that, do you feel like you're adequately covered for the unthinkable? And as Marlon said, you got 180,000 deaths in the U.S. We've had all these celebrities, big names that have, gone on. And what I'm saying is life is inevitable. I mean, death is a part of life, and we need to be prepared for it. And so we're just covering really the basics today. As we get further through the month, I'm just going to be unpacking little things that also go along with this, because this was just the basic. But there's life insurance that can be used to establish tax-free income. There's life insurance that can be used to create generational wealth. There's things in business use, such as key person insurance, buy-sell agreements. There's so many different things that we use it for. And so we want to just make sure that we kind of, give you some of these things. But what we really are excited about is just bringing some. And as you know, normally on Thursday night, we always have a guest. Unfortunately, our guest wasn't feeling well tonight. So, we came in and wanted to share some information with you. But here's the thing, is that we want to bring what we do, and that is to bring we want to bring real information. We want it to be educational, actionable, and life-changing. And so we want to give you information that you can take away and you can then use it. So that's what we're doing.
That is it, man.
And I think the other thing too is, if you want more information, just email us at info@therealmoneycoach, and we'll be sure to share information with you. If you want a life insurance review, if you want just an analysis of where you're at, just reach out to us. That's free. It doesn't cost you anything.
Awesome. Well, Tony, this has been really great. It's been very much a information, and I think sometimes you have to really get down to the core of having the foundation, having an understanding of the foundation. I want to say thank you. I went to the whiteboard, and that old teacher in you came out, tonight. So that was really
man, I'm
cool.
a house full of educators, man. What am I going to do, man? My wife's a teacher, my daughter's a teacher. Everybody teaches around here.
Right, exactly,
Yeah,
exactly. So no, it was great. It was great. So, I just want to say thank you. And for you viewers, thank you for, being with us. I know that this isn't, the real high energy, presentation, but again, it's so important to have a strong foundation, of understanding, and I want to say, this is what it's all about. And as Tony said, definitely reach out to us, info@therealmoneycoach.com. We'd love to hear from you. And as Tony said, complimentary review. It's no obligation. It's just a way for us to add value and to contribute. So we thank you, and want to say, for each one of you, remember what you do today will dictate where you'll be tomorrow, and that's really what it's all comes down to. And yeah, thank you. This is great. She said, thank you for this topic. Ironically, I had a dream last night about life insurance for my mom. She is uncomfortable with the discussion. And so, yeah, that's real talk. And so, please send us an email, info@therealmoneycoach, and we can share some strategies for how you can, have your mom feel more comfortable about the subject and why it's important. And, we're here for you. So, Tony, why don't you close us out, Tony? Oh, I think you're on mute.
Yeah. All right. So Marlon, again, just thank you for being transparent, sharing your story. And I just even want to thank people in advance. And if you have a story, if you have an experience with life insurance where it came through for you, email us at the info@realmoneycoach. We want to highlight those things too. We don't want to just always talk about those who didn't have it and those who had to struggle because it wasn't there or had to do the GoFundMe or whatever the case may be. What we want you to do, we want to share the success stories too. And so, it's just, again, so important. This is our passion. I've been doing this for 23 years. Mike Sloan was on here. I can't even remember how long I've known him, and we've been in this business. He's in Detroit. I'm here down in Charlotte now, but it's so important. This is one of those things that we have to take care of. And it's not a pleasant conversation to have. We don't like to talk about it. And oftentimes we don't want to talk about it to our parents and our spouses because we don't want to think about the unimaginable. We don't want to think about that person not being around anymore. But we must be prepared. And that's what it's all about. It's about being prepared and being ready. And so this is the footprint. This is the foundation of your financial plan, is to make sure that you're properly covered. And so this is as dreary as it's going to get, you guys. And so next week, we're going to talk about how you can use it as a tool to save on taxes, how you can use it as a tool to supplement your retirement. And I'll tell you this, one of the things of my clients that I work with, a lot of the ladies, the widows they've done very well. They've saved their money. They've done all the things that they were supposed to do. And then they find themselves in retirement and paying more in taxes than they ever thought they would. So now's the time to strategize and make sure that we can do the things that we can do, take advantage of the tools that are before us, and so that we can live the lifestyle that we desire. That's our goal. Our goal is to help you get to a state of financial wellness and security so that you can live the lifestyle you desire. And so that's our aim. That's what we're looking to do on The Real Money Coach. We thank you. Have a great evening, and we'll see you next Thursday at 8 p.m. Eastern Time, Facebook Live. Oh, let me say this. This is what I need you to do. If you have not done this, please go to our YouTube page and subscribe to our channel. Please go to YouTube/The Real Money Coach and subscribe to our YouTube channel. It's very important. Like us on Facebook. See you next week. Thank you. Have a great evening.